What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never contact you by WhatsApp or Telegram. I also do not invest money for my subscribers. I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least one penny in that account. They're going to give you up to 12 free stocks. There's a link down in the description box of the video. If you want to take advantage of that free stock offer by Webull, click on that link. Open up that account today. Go get that free stock. Go get that free money. Well, guys, I'm not spending any more money. There are some warning signs that a deep recession is coming. And I want to walk you guys through what those 3 warning signs are and why I'm already starting to hoard my cash. Now, I'm not telling you to hoard your cash. What I am telling you is you better start looking at what's going on around you in our economy. And your best option, in my opinion, is to watch what you're spending your money on. Here are the 3 things that tell me we are headed into a recession. Number 1, the ultra rich are starting to keep their cash. Got a call from my local Ferrari dealership here in town, and they were telling me, hey, we got 2 Ferrari F8 Tributos available. Do you want one of them? Right there, that was a red flag because 3 months ago, you couldn't find one. Now, all of a sudden, you're calling me and you got 2 available. That tells me one thing. The ultra rich are starting to cut back. They're starting to hoard their cash. They're not buying toys anymore. And you might say to yourself, why are they not buying toys if they're rich? Well, see, the ultra rich are smart. They're going to take those dollars and start buying cheap assets. Not cheap assets in the point that the asset itself is no good. When I say cheap, I'm just talking about they're on sale, right? They're discounted. So instead of going out and buying a $400,000 Ferrari, a lot of these 1%ers are starting to say, well, wait, let's take that $400,000 and buy these discounted assets. And then once we make our money on these discounted assets down the road, then we'll go buy that Ferrari. Also, you see a lot of your institutional investors, right? See, 75% of the investment in the stock market is by institutional investors. What we're starting to see is institutional investors taking their money out of the market. That's why the stock market is going down, guys. And where are they taking that money and putting it? They're putting it in U.S. Treasury bonds. Why? Because they can get a 4% yield on those U.S. Treasury bonds until they wait and figure out what our economy is going to do, when our economy is going to rebound again from this recession. Now let's move on to the second reason why I believe we're in a recession, and that is going to be the housing market. If you've been paying attention, guys, the housing market is starting to cool off around the country, right? We already know that sales have cooled off months ago. Sales started cooling off, right? We also know that the demand has cooled off. And the reason demand in the housing market has cooled off is because of what? Increased 30-year fixed rate mortgage rates. A year ago, they were around 3%. In today's environment, They're in that mid 6 to 7% range. That has cooled demand. So you got sales slowing down, you got demand slowing down, and now the third thing that's slowing down in the housing market is what? Prices. That's right. Prices are starting to come down, guys, in a lot of markets here in the United States. And the reason prices are starting to come down is because those first two things that I mentioned, increased interest rates and lower demand. So when anytime you have interest rates skyrocketed high and low demand, the supply that you currently have in the market does what? It stays out there too long. And when it stays out there too long, in order for sellers to sell their property, they got to do what? Reduce the price. So those three things are happening in the housing market, and that's a telltale sign that we're in a recession. Now, the third thing that tells me we're in a recession is the labor market. So I'm looking at some statistics from last month, and it looks like 1.1 million less job openings in a 1 month period, right? From August to September. Guys, that's not a good sign because, we have been in an overheated labor market where there was more, right, job openings than there were people to fill those jobs. Now that's starting to slow down. Also, month over month, we've seen wages come down by 0.1%. So now we got what? Less openings. We have wages coming down. Telling you guys, that's a telltale sign that the labor market is going to be softening, which is exactly what the Federal Reserve wants to happen. Because the Federal Reserve understands if the labor market softens, unemployment goes up, then people start feeling the pain, right? People start feeling the pain because a lot more people will be unemployed and won't be able to just spend money, won't be able to just borrow money either because the Federal Reserve is continuing to increase short-term interest rates, which affects people's ability to borrow money cheaply, right? So those are the three things that I'm seeing in our economy that signals to me we're in a recession, and it could be going to a deep recession. So I'm hoarding my cash, guys. I'm not buying any more luxury watches. I'm not buying any more luxury cars. Matter of fact, I'm going to be selling, hopefully, some of these cars just to put myself in a position to buy assets, man, that are discounted, that are cheap, that I can get below their true value. And then what I'm going to do with those assets, I'm just going to hold them. I'm going to hold them through this recession, which will last a couple of years. And then when I get on the other side of this recession and the economy starts going back up, we get inflation down to 2%, which will probably be in late 2023. It could go all the way out to 2025, guys, before we get inflation back down to 2%, right? But I'm going to hold those assets until we do that. Once we get back to a healthy economy, inflation at 2%, the stock market starts rebounding, then at that point, I'll go ahead and sell those assets and hopefully have a nice gain. I believe I'll have a great gain because I'm buying these assets right now, historically low values, right? So I'm telling you, man, protect your cash. Don't be spending your money on things, man, that are not going to increase in value over the next 2 to 3 years. Don't be buying cars. Don't be buying luxury items, luxury bags. Don't be taking these luxury vacations. Don't do it, guys. Don't be enticed by these automobile manufacturers giving you all of these incentives to buy new cars. Oh, we're going to give you 0 interest rate for 5 years. Oh, we're going to give you $2,500 cash back. Don't do it, guys. I'm telling you, it's a trap. Save your money, put it in investments. Investments that will appreciate in value over the next 2 to 3 years. That's what you should be doing, right? And I tell you what, we seen it in 2008, guys. I'm telling you, this is going to be right up there with 2008, not from a housing market collapse, but from just from the economy collapsing, right? Just from the economy collapsing. Because what's going to happen is when these one percenters pull their money out of the market, and when these one percenters stop spending, that's when things are going to go downhill fast for our economy. See, right now, the one percenters are, up until, this month, they've been still spending. That's why inflation is still going up. See, normal everyday folk have kind of cut back some. But the one percenters are the one that's been really spending and keeping inflation high. But now the one percenters are going to start pulling their money out of the market and hoarding their cash and buying investments, right? So all I'm telling you to do is if they're doing it, you got to make sure you're watching out for why they're doing it. Because you got to understand, guys, the one percenters control what? 99% of the wealth in this country. They do. So if the one percenters are starting to pull their money out, why in the world would I keep my money in? Why would I keep spending money on things? I wouldn't. So be smart, guys, with your money. Protect your money. Drop me some comments down in the comment box and let me know what you think about the 3 recession indicators I just mentioned, right? Hoarding cash, housing market decline, labor market decline. If you want up to 12 free stocks from Webull, as I mentioned, guys, click on that link down in the description box. Go get that free stock. Go get that free money, man. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hand. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.